Time for hot picks. Here are three ideas in the small and mid-cap space. We are joined by Ryan Modesto, CEO and Portfolio Manager at I2I Capital Management. Ryan, great to see you. Just remind us, have we seen signs of strength in the small and mid-cap stocks relative to the tech giants, or have they languished lately?
Typically, the space has languished behind the large cap space, and that's actually where we think a pretty big opportunity is right now in the small and mid cap space. I mean, the large cap US are trading at close to all-time highs, and their valuations are also around kind of their highs as well. Meanwhile, the US small and mid cap are trading right around their long-term averages, so they're certainly not expensive. And relative to the large cap space, they've actually almost never been as cheap as they are now.
Your first idea is Commvault, a cybersecurity player. Tell us what attracts you here.
Yeah, so Commvault does cybersecurity and data recovery. And so essentially, if you're a large or small enterprise and your operations go down from a cyber attack, Commvault's kind of continually updating and backing up all of your digital systems, and they can spin you back up into operations quicker than most other options there. So obviously, pretty important, because if your operations are down, that costs companies a lot of money. And with the importance of data, like just data becoming more and more important at companies, kind of being able to recover and store that data is important. So Commvault's in a pretty nice spot right now. On a key metric basis, I mean, they're firing on all cylinders. Their net revenue retention is at 125%. Their annual recurring revenue was up 26% this last quarter, year over year. Their customer count is up 30%. No debt on the balance sheet, and they continually buy back shares as well. So a lot to like with this name.
Your next idea is Genius Sports. Where do they fit into the sports betting industry?
So they're almost like the data and the infrastructure layer of sports betting. If you want like a real picks and shovels play on sports betting, we would say that Genius Sports and their main competitor Sportradar are the two main companies to look at. So what they do is they go out, they sign deals with different sports leagues. The NFL is actually called the crown jewel for Genius, and the NFL actually owns warrants in Genius as well. So they go sign these deals, they track the sports data, they organize it, they create wagering odds, and then they turn around and they license that data out to the sport books, like the sport betting companies that you can bet online. And so just they're kind of that base, a necessary layer in that go between the sports leagues and the actual sports betting companies. And there's a lot of nice tailwinds in this industry. If they're growing about 10%, the industry is growing about 10% year over year. In the US, it's growing at about 20%, because people forget that legalized sports betting in the US is fairly new. It's maybe 5 or 6 years old since it's been legalized. So it's still a somewhat high growth industry. And the one thing we think that's getting overlooked with Genius is their advertising business. So they're just rolling out this advertising business now. So it's going from starting at zero, and they expect it to become a material contributor to their overall results over the years. So we think in the second half of this year, it could be a nice kind of uplift for the company here.
And this is intriguing. Cellebrite, it's a digital investigation software company that can unlock mobile devices. What is this all about?
And no one's safe, right? So these companies, they work with government agencies, right? So government agencies will use their software to compliantly unlock, tap into mobile devices, and with crime moving online and digitally more and more, they kind of need these types of tools to efficiently and effectively be able to understand what's going on and take the bad actors to court and win the court cases as well. So becoming a pretty much an integral part of government agencies' workflows. It's like just a really solid software company, rule of 40 type of company, trading about 30 times forward earnings, but they're growing at double digits. There's been a bit of a drawdown in the company lately, and what's happened is there's been CEO turnover, and the CEO stepped down months and months ago in a fairly orderly fashion. But it's taken them a really long time to find the new CEO replacement. So the interim CEO has now finally been named as the official CEO. So that kind of cloud is sort of behind them now. And the other issue has just been the US budget funds flowing out. So with the new budget getting approved and all that kind of thing, there's been a lot of the funds have not been released for these companies. and contracts aren't getting signed. This isn't a Cellebrite specific issue. This is a defense sector across the board issue in the US. But come October, those funds should start to flow. Contracts should start to get signed, and we think Cellebrite will also benefit in that trend.
I did watch that French spy series called The Bureau, and there was an awful lot about hacking cell phones on it. Spies are very interested, and spy agencies are interested in doing that. And one interesting thing here is that they're obviously, as you touched on, government spending is one concern, but they're well entrenched in the U.S. government, these people.
Yeah, and they're a bit on the leading edge too. So it's a bit of I mean, they've been around for a while, but it is a newer type of technology. So we think it's still really in the early days of their runway of doing their land and expand strategy, and also rolling out new technologies as well. And it's a bit of like a stamp of approval on this one is a company we also own called Axon Enterprises. They actually own a bit of this company as well, and they're also well into that defense sector with government agencies and things.
So, and just to clarify, Ryan, these are all U.S. stocks.
Correct, yes.
One problem with the Canadian small cap market is lack of liquidity. Sometimes institutions don't want to get involved because they're worried, oh, we can't sell a position without destroying the stock. I guess that's less of a problem in the U.S. market.
It really is, and it's so funny. You can find in the Canadian side of things, you can find a $500 million market cap company that barely trades, which is super frustrating, right? Especially if they're great companies that you want to own. On the U.S. side, I mean, you can find $200 million market cap companies that are very liquid kind of thing. So I mean, obviously, different companies you can get into some liquidity issues, but more so on average, the liquidity issues are far less of a concern in the U.S. small mid-cap space, and it's just such a deeper market as well. I mean, if you're looking at the Russell 2000, right, you have thousands of companies to choose from versus the Canadian side of things.
Yeah, it is interesting, and of course we get this situation where they just get taken out in Toronto, sometimes at big premiums because people just don't want to trade them.
Yeah, and then all the good ones get taken out, right, and then you're only left with the bad ones at the end of the day.
Oh, Ryan, thank you very much. Always great hearing from you.
Thank you.
Ryan Modesto, CEO and Portfolio Manager at i2i.